What's up, guys? Today I'm going to be going over, in my opinion, the only indicator you really need to use and probably the most helpful indicator, and that is a volume profile indicator. To start this off, I've used both TradingView and TrendSpider, so being able to set these up, pretty important, right? So on TrendSpider, I use just volume by price tool. It will come preset with about 25 columns. I set this up to 50 just because it's easier to use on intraday levels. On TradingView, for indicators, we're going to go to technicals, volume profile, and then I use volume profile visible range, VPVR as well. And I just use the preset settings for this one. The reason that volume profile is so helpful, and there's a bunch of them, right? But the ones that I really like are we can identify key support and resistances much better. We know when price is going to be a little bit more choppy as they're higher volume nodes, and we also know where price can move faster. So that's what I really like it for. In terms of time frames, I use it a little bit on the daily just to give us a better sense of where those big move potentials are on a daily, but I like to use it a lot on the hourly and the 15 as I am a day trader, so I'm more focused on these levels intraday because I don't really plan on swinging them or holding them for any extended period of time. So I do like to focus a lot on the hourly and the 15. The hourly means a little bit more since it is a higher time frame, but I love using it on the 15 as well to find those pockets where price could move faster. The first way that I use it, and I really like to use it, is identifying supply and demand zones and the importance of those supply and demand zones, right? The bigger the node on these VPA profiles, the slower price is going to move and the more significant this price is. So this cluster here, we know, price is going to move slower as opposed if we get above this 356.6, 356.6, we get above that, we can move faster. We know here it's going to move the fastest, and above will move decently faster than it does in this volume node here. And the reason being that's just where more shares are traded. People have defended these zones. In this case, with QQQ here, I know that 356.6 is going to be a big level. That's a little bit above. That's okay. Over that, we can move fast. Another thing to note with VPA is once we close above a level, that can be used as a launch pad to propel us into these next bigger zones. So a close above 356.6 here, I would expect to move up towards this 357.6, 357.7 area. And then through that, we can move pretty fast up here towards 358, 85, up towards 359. So that can help us a lot. It can also help us when looking where to scale out and where that next big resistance is. I'll use PayPal in this example here. PayPal, if we look here on the hourly, PayPal was denied. There is this POC here, but PayPal was denied at the very bottom of this top volume node, right? So we know that this is going to be a very big spot for PayPal. Is going to be where those big volume nodes are. So we can look to enter into puts if we can't reclaim in that zone. Now this purple line here, the point of control or VPOC, just shows where bulls or bears, people are trying to control that volume. If our POC is above the current price of the stock, that means that sellers are in control, and inversely true. I use it more or less on, I execute off the 5, so I use it more or less on the 5. But I just get a sense of where people are trying to take a position, right? In this case, it looks like this POC is all the way down here, 111.15, 111.2 area. So we know if we close back above that POC, we know that the buyers have stepped in pretty heavy. If we close under POC, we know that sellers are in control. And in this case, if we close underneath POC, we also have this little volume node here on the intraday with the possibility of flushing down towards that 110.25 level that has been very key support here on PayPal. Now I'm going to use TradingView's replay feature to go back and kind of analyze how we could have known where price is going to move faster. Today, the trading day on Friday, was a little bit more choppy, right? And that was something that we could have known if we really used this volume profile. So we had pretty quick movement on the 5th, The 6th decent movement had FOMC, so I'm not going to do too much on that. But if we replay this here and we go to end of day on the 4th. So on the 4th, let's look at our POC all the way down here. VPA profile, right? We know underneath this 365, let me throw a line down. Underneath this 365.8 level, looks like, we have decent move. We can move pretty fast. Down here towards 362.4 area is the big one I notice here on the volume profile. Now I'm going to go ahead and fast forward this to the opening candle. So opening candle here, April 5th. This is the hourly time frame. It takes out these levels and it's going down into our volume gap. Fast forward this a little bit more and we completely fill that volume gap, right? But look where we catch. Right on the bottom of that volume node that we talked about earlier, right? Cool. So we start to close in here. Price gets a little bit more choppy. This is where we could have used volume profile to notice that price isn't going to move as fast here. Price moves faster in between from big node to big node than it does when we're inside of a zone. Once we close over or below a zone, those zones then become, resistance or support, and price can move faster when there's less volume on these nodes over here. Now we'll fast forward to today. So on today's, we can see volume's a little bit thin down here, right? But very heavy in this 352 up to 354 area here on the hourly. And a reason being, we traded a lot of shares in there, right? We had FOMC yesterday, so, we could have noted that. But we could have expected a chop day if this level was not overcome. We kept testing it, Let's go current day now. We'll go over here on the 5. So today, right? Get out replay mode here. But here on the 5, right? Today we're stuck in these zones. We continuously test up 352. We continuously test. But as we see here over on this VPA, there's a lot of shares traded within these ranges, so the price is going to move slower. Therefore, the general knowledge that chops are probably more likely than they are once we can close over these VPA profiles and push up. Now, the last way that I really, really like using VPA is to find plays with big move potential. In this case, PayPal, decent size, I like it. Downside we know is going to move a lot faster, all the way down to about 106 to 104.77. Looks like could be a pretty strong move. But I use the hourly and the 15 when looking for day trading levels. Let's take a look here. So looking at PayPal, definitely hanging on some nodes, definitely going to trade slower in here. The hourly we already saw. Now we can use NEO as an example here for a daily and what I'm looking for. So looking on the daily, right, we're denied pretty strong by this volume node. What would I expect? If the markets tank, I would expect NEO, nice downside move. Not as much volume profile here, especially once we get towards 19.2. Nice flush down to 18.65. Let's look at the hourly, break this down a little bit. I spent a lot of time looking at these VPA nodes on the hourly and the 15, and the reason being I can break down resistance is easier. So on the hourly, 19.6, very big level to hold here on NEO. And then we have a nice gap all the way down to about 18.7 before the really big zone I noticed is 18.05 down towards 17.6. So on the downside, I really, really like this. Rivian is one that sticks out to me. So here on the hourly, we are in a bit of a volume patch, right? Decent move, bounced off that today, could bounce more. Let's go here to the 15, see what we're working with. So here on the 15, this sticks out to me, right? We need to close above this POC and this volume patch at 40.20 for a push towards that 41.15, and then a possibly nice move up. But on the downside, go back to the hourly, we also have a volume gap to the downside, which is nice to see, right? This means that there's that big play potential on both sides. So this interests me when looking for tickers to trade. I'm looking for those zones of consolidation that we're in currently with volume gaps above and below, preferably. But if there's a volume gap to one side, I would rather play that side, right? Because price is going to move slower. I still have to wait on a nice entry spot. But then after we get that close below, I can target more towards these higher volume nodes where I'll throw down a line and a price target, knowing that that is most likely where price is going to bounce off of.